So this is a panel review, the title of which is Placing Trade Digitization in Context, the Need to Break Down Borders with Frictionless Commerce. I don't really know what those words mean but altogether, but essentially what we're going to do is have a talk about the solutions that we've just seen, talk about the way that they can be scaled within the African context, but then also talk about this whole topic of digitization, trade digitization in Africa, and what we need to really move that along. I should obviously be digitizing my notes. So joining me in this discussion, we have three fantastic panelists. So I'll just take a second to introduce them to you. On my left is Michelle Chivunga. Michelle is the founder and chief executive officer at Global Policy House. Alongside her is Bohani Hlungwane. He's the group head of trade and working capital Pan-Africa at Absa. You've heard some questions from both of them already. And then joining them is Andrew Coles, who's the global head of solution consulting at Surecomp. Welcome to you all.
Thank you.
And I do encourage the audience, if you do have any questions for the panelists, please raise your hand and we'll get a microphone over to you. So now, having heard from all of these various fintech companies, Michelle, and I'll start with you, and sort of looking at the wider fintech conversation in the African context, let's start broad and then maybe we'll narrow in. What needs to happen to maximize the potential of solutions such as these that we've just seen on stage today? Does the sub-Saharan African region and the industry have the right kind of environment for ensuring their adoption and successful take-up? Let's start there and then we'll take it from there.
Sure. No, thank you so much, Shannon. I hope everybody's having a good afternoon. It's great to be here. I think, definitely these solutions that we have heard about, I think do need to be scaled up. But I think a number of things need to happen in order for that to actually materialize. And I think one of the things that should be happening is really providing the right environment for businesses like the ones we've heard to actually thrive. So, one of the things that we are also looking at in the African context is actually providing that policy environment with things like the Continental Free Trade Area, where we're encouraging really to try and look at the policy frameworks and regulatory frameworks that might hinder some of these businesses to scale and to grow, right? And hence why my question to the last participant is that, if you have the ambition to grow and scale into these different markets, what are the barriers? It's not always the technical barriers, not always the technology barriers. Most of the times it's very much around, no clear regulation, not sure about kind of the data rules in certain countries, how you develop your product, how you're going to market your product, how are you going to, scale that. So we need to provide the right environment, I think, number one. Then, of course, we come to the issue around financing, because we have heard a lot today around how financing is always a little bit of a barrier. Some of the businesses are starting to scale and grow, and they want to scale and grow, and so they need growth capital, right? And sometimes it's very difficult to get access to growth capital. So we have to worry about the financing side of things. We have to worry about the regulation side of things. And I think also for me, in order to get these businesses really scaling, is also starting to be a bit more tailored, which we heard a lot from you, about how we can make things a little bit more tailored. And personalized. So the support that we're giving, for the businesses, can we make it a little bit more tailored? We want to encourage a lot more, for example, women-led businesses on the continent. Africa is driven by young people, women across the continent. So of course, we want to be able to, provide support to those demographics as well. So it's a number of things. I think, when you combine this sort of access to capital, strengthening the capital markets within the region, strengthening the policy environment that we have also is very, very important, I think, for some of these businesses to grow. And then even in terms also accessing maybe software that the companies require to expand their business or change their business model a little bit, because either they've decided, no, I'm shifting from a blockchain and I might be using, artificial intelligence or whatever, analytics. It has to be flexible enough. I think the environment has to be flexible enough so that you can change your business model depending what's going on also in the environment.
And Bohani, let me come to you. So as far as I'm aware, none of the guys that presented to us this afternoon are yet very well established in the African market. What do you think might be the biggest sort of barriers that they'll be coming up against as they try to do so?
Thank you very much. And I hope once again we're all having a good time today. I think, and I think the first presenter and the last presenter did touch on this point. I think we have gone beyond excitement about blockchain and distributed ledger technology and all of these kinds of things. And where we are right now, and maybe it's not just in Africa, is what pain points should technology solve? I think that's it. And if I think about it from an Absa perspective, and I don't think it's just about Absa, it's everybody. I see a few things. One, I see we all have an inability to go beyond tier one in terms of suppliers, right? And there's a lot of reasons for that. We all know all those reasons why that is the case. But if you drill even deeper, you could say that a lot of the data that we have access to, we probably are struggling to utilize it at making decisions. Making decisions faster in a more secured way, and so forth. So that's what I see. And I think the last presenter spoke about this. I think we also continue to scratch our heads around fraud, whether it's double financing or double invoicing or whatever kind of fraud, right? In terms of trade finance. So more than the barriers themselves, I think the point for me is what is the value add? What pain points can you solve? Because I think just coming across and saying you have this solution or that solution, which is beautiful, is brilliant, it's all of those kinds of things. What I'm finding in the bank as people come through is, and we meet a lot of fintechs that reach out to us. I think almost every second week or every week, there's somebody that either reaches out to me or to some of the members of the team to say, we've got this fantastic idea and all of that kind of stuff. And so we've moved beyond just like, ecosystem and what and all of that kind of stuff, great MBA words and so forth that we use to say exactly what does this mean. And by the way, I also think, to have presentation as well, there's also a lot of supplier finance or supply chain finance solutions out there. But let's be honest with ourselves. We haven't made any dent in terms of closing the finance gap. And therefore, the question that I have, which I have for everybody, is what is it that you're doing that is different, which would help us solve that problem? So rather than the barriers themselves, I think the question is, what is the value add? And if you can be very clear, articulate exactly what value add you would bring to the ecosystem, to banks, to the suppliers, I think we're now moving to a different kind of conversation.
Yeah. Oh, you get a round of applause on that. I think that's a really important point, the fact that companies should be able to clearly communicate and demonstrate the USP, so that, bankers such as yourself who are being approached on a, say, weekly, monthly basis, you have a good idea of what problem they're trying to solve. Andrew, let me come to you. What do you think needs to happen to maximize the potential of solutions such as these, whether in the African context or in the global context?
Yeah, first of all, your point is 100% correct. We always have to ask the question is what value is this solution bringing? The underlying technology, blockchain, cloud, is almost irrelevant. It's what is the value and what problem we're solving. There are a lot of questions that often aren't asked. And digitization and having that end-to-end digital journey with data being captured by the new applicant or someone on the dock side checking something in, we have to ask the question, why is there not that level of adoption yet? We think about a bank's digital portal that banks have had for 15, 20 years. They've had an online presence to manage trade finance transactions. I was talking to a large European bank recently that said that only 20% of their business comes through that digital channel. And so the question is, why does 80% still come through manually? Why can't we get that 80% onto their platform? And this is a European bank, so those challenges are global. How do we look at those problems? How do we address those problems? How do we get the technology in the hands of the people that need it so that we can get the data to the bank, and how we can solve those problems?
Yeah, thanks, Andrew. Michelle, one of the conversations we have at GTR often when we talk about digitization, people always throw things like, oh, but we need standardization, we need standards. Would you say that's an issue in Africa? Or how much of an issue would you say that is in the African context?
Yeah, no, I think it's not necessarily just an issue in the African context. I think standardization as a whole, especially when we're shifted into this digital world. So for me, I like to contextualize things a little bit. So, we have obviously all of us around the world shifted into the digital world. But then how we've shifted into that digital world has been slightly different when you move from region to region, right? One thing that definitely brought all of us together, whether we liked it or not, was COVID, which forced us to actually start to interact in a digital way. So, even when we're dealing, the way we're dealing with trade, I think we'll naturally have to shift. Your point around how we have not managed to tackle that issue around trade finance, for me, is a classic example of how actually, why should we carry on doing things the way we've always done it, right? Can we look at alternatives? So for me, it's very much about creating choice. But even when you're creating choice, there has to be some elements of standardization in place. There has to be elements of interoperability. So even if we all go off country to country developing different systems and they don't interoperate, that's going to be a problem. If we don't have some commonality around standards of some sort, that's going to be an issue. That's an issue that's going to impact the Fintechs, it's going to impact the banks, it's going to impact almost all of us. So I think the issue around standardization definitely is very important for all different contexts. And yes, it's also very important in the African context, but that's why I started off my comments around the importance of us having things like the CFTA, because that's starting to provide a little bit of a platform for us to create that environment where we're looking at standards, we're looking at interoperable systems, payment systems. We've got the PAP system that's coming through Afrexim Bank, for example, in the continent. That's going to be pretty influential on how payments and settlements, kind of happen. You've got a growing fintech ecosystem in Africa. Yes, it's dominated by 3-4 countries, but I believe that that's going to shift to other parts of Africa as we see more and more of an environment that allows for that to happen. An environment that allows businesses like ours to come in, right, and to grow those businesses. And that will help us to also think about, okay, how do we now create our standards? Can we look at data rules, for example, right? How many countries in Africa have got data rules? Clear data policies and data rules. There's not that many. So what happens when I'm coding and I'm doing my code, regardless of the tech, we are tech agnostic, right? Regardless of the tech, right, I still need to follow certain rules from country to country, if there are rules. And if there isn't any rules, then what happens around that? So, standards are very important. Harmonization, to a degree, is very important. Interoperability, I think, is critical, especially as we develop new platforms, we develop new systems, we have to make sure somehow they interoperate with each other. And finally, I'll just take payments as an example, and settlement and payments. We're seeing a lot of innovation around that space, especially for Africa, because we're going to see more and more people want to do business cross-border. So inter-regional trade, right, within Africa, but also cross-border, which would make Africa a little bit more competitive. But in order for that to happen, I think we do have to have certain rules and standards around how we utilize data. How do we provide privacy for people? Even the ordinary consumer, I don't care whether you're providing me a blockchain AI system. I want it to work. I want it to be fast. You know what I mean? I want it to be, but I want you to use my data in a way that I'm happy for you to use my data.
Yeah, these are all excellent points. I just want to pick up on something that we have kind of alluded to, which is the relationship between fintech and say bank, buyer and seller, because I don't want to generalize, but I would assume that a lot of people in this room are either being sold fintech or they're a fintech trying to get people to sign up to them. Bohani, from your perspective, how has the operating environment for fintechs in Africa changed, say, in the last few years, now that digitization is such a buzzword and we're seeing so much happening around that? How are conversations with newbies in the market now compared to where they were, say, 5 years ago?
Yeah, I think, and probably picking up on the point we made earlier, I think people are now realizing that, firstly, you can't come and say to us, blockchain, explain to us blockchain and so forth, right? So one is, there is an understanding that what is it that you're bringing across? Do you understand what we are trying to solve for? What our customers are trying to solve for, right? And what the continent is also trying to solve for. So I think the conversation has shifted. But, practically we get, and I won't mention names, but you get all of this, blockchain solutions or companies, ecosystems that come in and say, please join ours, please join ours, please join ours, right? And for me, what I'm trying to get to is, if I look at our business, and I don't think it's just us, is what do we want to do? Okay, we want to finance more, right? We want to finance more beyond, for example, our balance sheet. That's what we want to do. We want to finance in a manner that we're comfortable that the risk is properly managed. We want to get more comfort financing SMEs. I have asked the team, for example, to work together with DFIs that we'll partner with to try and find a solution that works for SMEs, because we're struggling on that. So even the DFIs, for example, and some of them are here, they've got solutions that work via another FI. So you take risk on the FI and, share the risk. But if you listen to everyone talks about the fact that the growth of the African economy is driven by the SMEs and will be driven by the SMEs. The AFCFTA will work when it is actually working for the SMEs. So I'm saying that the start of the conversation must always be, what problems do we want to solve? And unless we have those kinds of discussions, we just get excited about the technology and walk away. We all go to our problems and to our issues of KYC and this deal and this transaction and all of that kind of stuff. So, but I am seeing a little bit much more relevant engagement with multiple. I can give an example of a fintech that we are partnering with in Kenya, and we're looking to scale up, which is solutioning an area that would have been very challenging for us between wholesalers and retailers. It's giving us access to data, and it's giving us just-in-time information that makes us respond appropriately, so that we either continue to finance, or if we lose money as a bank, we just lose it on one transaction, just to give you a sense. Now, that is plugging into an area that, as a bank, we've historically had challenges with. So for me, it's and that is my interest. And even as we discuss within the bank, with multiple partners and all of that, it's really at the core of what are we trying to solve for. And maybe let me close this point, my comments by saying, the solutions are not out there, right? The solutions, I think the fascination about technology is great, because we need secure technology, scalable, and all of that kind of stuff. But let's solve the basic things that makes financing challenging. I hope that the next time we have a discussion like this, 2 or 3 years down the line, we say, we're discussing things like this has been scaled up, and, we've put in $300 million, we've put in $200 million in Kenya, in Mozambique, in Ghana, wherever that is. Because then I think we are making progress.
Thanks, Bohani. Andrew, I'm going to ask you to be as independent as possible, knowing that you work for Surecomp. But let me flip that question on its head a bit and ask it to you. With this plethora of solutions that are coming to market, where should banks be putting their money? Is the first question. And then secondly, in addition to those decisions, what should they be doing to start thinking about integrating with these various solutions that are out there?
Yeah, great question. And obviously it's a conversation I have all the time. For me, one of the great ironies of all of these different systems and these new solutions come to market, the digitization explosion of trade, is we're actually creating more manual processes in the bank. They have to connect. We look at these platforms as an origination channel, But you still need to have the system in the bank to manage that instrument and to do the payments and the accounting, etc. So we're actually creating an integration headache or a extra manual processes for these new platforms. So some banks, the larger banks, have had the ability to work with some of these networks and these platforms from the very beginning. We all agree that the technology is there. It's proven, it's usable, it can work. It's now moving from proof of concept into production and taking these solutions and making them productized and bringing the business models forward. From a bank's perspective, I'm actually seeing that a lot of the direction of which solution to adopt is being driven by their customers. So the banks need to be agile. They need to have a system, and I'll try and be as independent as possible, but their back office systems need to be open and flexible, have easy integration points into these new platforms through standardized APIs, etc., so that they can be fast to respond to their customers' needs. Because often that customer, if you as a bank can't provide that solution for them or support that solution or that platform, they might go and talk to your competitor. So really, to answer the question, it's around flexibility and agility and to be able to respond fast, whichever platform should gain more traction.
And what should they be doing to then prepare themselves as they go into the meetings or post these meetings? What should they be thinking about the banks when they're speaking to these tech companies?
From a purely tech perspective, it's around connectivity. How easy is it for me to connect to that platform? What functionality is there? How much can I manage on that platform? How much do I need to manage my back office systems?
Thanks. Should we take some questions from any of the presenters, Jeff or Raja or Ahana? Do you have any questions for our panel of experts? No? Oh, we have a question all the way down there. I think this might be the only mic, so I'm going to... Is there another mic? No, I will get my 10,000 steps.
Afternoon, everyone. I'm Nompilo Mjali. My question to the panel is, we see so many systems, right? And the problems are also multifaceted. Do you think that in solving some of these problems, particularly with the trade finance gap, that it takes multiple systems? So we should be collaborating, and gone are the days of just partnering with a single system or a single platform provider. Do you think we've gone ahead and moved on to say, let's rather follow a collaborative approach? Thank you.
So, I mean, if I could take a first stab at that. First of all, I don't think that technology is going to solve the trade finance funding gap. It's going to help. It's going to help improve how banks can process transactions, for instance, reduce down costs, make it more enticing for banks to lend a bit further down the chain than they would do before. But it's not going to solve that. That's going to be solved by multiple parties all working together.
Yeah, look, I think that for me, there are two, or if you like, there are three kinds of problems we're dealing with, right? I think the first other problem, which I think is a big subject by itself, is the models we use to decide to lend. Are they fit for purpose? Do they make sense in the sector, in the environment which you operate? And I think for people who therefore understand, working capital and cash conversion cycles and all of that, I think we all know that we have to talk to our credit departments and many other stakeholders to understand how safe it is. So there is an aspect about the gap itself, which is a function of historical lending behavior that we need to deal with. That's one issue. As it relates to the technology, I think, yes, you are very right. I think we beyond just joining single, companies or ecosystem providers and all of that, I don't think that is taking us any further. I think this must always start with what problems we're trying to solve for. And I think many of us, the banks, the suppliers, the corporates, are probably trying to solve for the same things, right? Comfort that you will get paid, comfort that, or rather access to early payment, you as a bank comfort that there will be repayment. All these things we do is, predicting to as close to as close we can to certainty as possible that will get repaid. So I'm saying there are multiple things that we need to be dealing and solving for, but prioritization will be very important. I think, the technology story or the blockchain story at the beginning, it was everybody, great revolution, bring everybody in. But I think we've now moved to saying, can we solve this problem here? And then maybe after we've solved this problem, we'll move and solve that one. Because we are banks, our bosses are asking us, where's the revenue, where's the return, and all of that. So we don't have the latitude to spend a lot of money without any returns. That's our reality. Even the companies are in the same position.
Yeah, just quickly to add, I think your point is really valid, and it's the reason why I feel we're still sitting here discussing the same things over and over, because we're very bad at collaborating. We're very bad at coming together and saying, actually, I'm not really that good at doing X, but that fintech is really good doing X. Can we somehow kind of team up? So it's taken us a while, I think, to build, number one, the relationships, to actually move and scale things that we need to do. The other comment I had was very much around, we talked about SMEs. A classic example is, dealing with an SME. If you're going to put an SME that's probably never had credit before, and you have to do the KYC, how long is that process going to take? If it's going to take 7 to 8 months, and then there's an alternative provider who will take, 1 month or 3 weeks, where's that SME likely to turn to? I think very much likely to turn to the one that's going to provide them the financing faster. So my point is exactly what you've said, is that we have not been collaborating that well before in the past. I have seen situations in other parts of the world. This is not an Africa problem. This is a global problem, right? I've been to Asia, where I've seen a lot of the Asian banks, for example, work very, very closely with fintechs to provide solutions for SMEs, because the banks are not necessarily structured in a way to service SMEs, to cost them more money to service SMEs, right? So they've kind of partnered with other providers. So for me, the collaboration is really important, as well as the elements I talked about earlier on, where you have that environment where you can actually deal with SMEs, be it around data, you have access to data, you've got access to information. The other point that we're really, really bad at is we don't want to also share data and information. So you could have huge customer base, and you know your customers really well because you've been dealing with them for many years. And the fintech is trying very, very hard to bring in a solution, but they don't have customer base, right? And they're struggling to get access to customer base. So for me, automatically, I'm thinking, why is it not that you can partner? Because at the end of the day, we do want to service the SMEs. At the same time, of course, make some money and some profits. I think there are ways of doing that. So for me, the collaboration piece is really important. It's the reason why, I think part of the reason why we have not been able to service our SMEs really well. And I think it's an opportunity now to actually think a little bit differently, be prepared to change our business models a little bit, and our regulations and data, which is what we are doing with things like the CFTA.
Yeah, I think it touches on what us at GTR, we hear a lot from bankers, and I would say maybe bankers specifically in more sort of developing markets is, because there is this plethora of solutions, are they expected to, be part of each and every consortia, trade finance consortia that comes along? No, they're probably not. They're not going to get involved in every solution that presents itself. Ideally, they're looking for one thing to plug in that's going to take them everywhere, and obviously we're not at a solution like that just yet, but maybe this is the dawn of banks being a little bit more demanding in terms of what they want to see from these solutions. Michelle, something that you mentioned at the start of the discussion was financing for the fintechs themselves, right? So this is something that you and I have spoken about before, the access to finance for the fintechs. It's spread somewhat unevenly across the African continent in particular. How can we make sure that everybody is getting the attention, the financial attention that they need?
Yeah, no, excellent question. How many people here are from Nigeria? Just curious. Nice. So you guys are getting the fintech money, aren't you? No, but seriously, I think, it's a valid question because you have quite a lot of activity happening within the fintech space in places like Nigeria and Kenya. I just came from Nairobi, from Kenya, South Africa, Nigeria, which is fantastic to see. And actually, I don't think you have actually even seen the peak of that investment that is flowing in. It's just really the early days. So you're going to see quite a lot of investment going into fintechs, but what we want to try and encourage is actually to have that spread across the continent. So rather than just having VC money pouring into Nigeria or VC money pouring into Kenya, we want to make sure that we can get visibility of other countries and other fintech solutions that we have in other parts of the world. And again, it goes back to my earlier point around, okay, why is it that they're not getting visibility, the others? Why investors maybe not necessarily going into these other markets? An issue I have personally is I think we also have to encourage the internal investment markets or the internal VCs, right, within the continent to actually start to push money towards fintechs in their countries as well. So we create a new kind of internal VC market or capital, strengthen the capital markets in each of these countries. Because at the moment, I think it's very thinly spread. And then the other challenge we have is that you find that a lot of African-led fintechs are not necessarily the ones getting the VC money. It's probably, you have maybe outside, people coming from other parts of the world who have set up in Africa, or you've got diaspora who've set up in Africa. So we want some of the locally driven fintechs to also get the support they need. And then, of course, naturally, for me, I'm very passionate about supporting more women-led businesses, especially on the continent. So we want a lot more women VCs because, they're a little bit more sensitive to what I think women need and have been a bit more attentive. So we want to create the ecosystem of investors who are within the continent, but also who tailor, their investment into certain areas. We want to encourage a little bit more impact investment as well, because I think that's also a very new gender-led investment is very, very important for the continent. So for me, I think, yes, we do need to diversify the pool of where the money is going. We need to create an internal investment market. We need to work with the banks as well. I think the banks also have a bigger part to play in terms of supporting these new fintechs, especially that is in their interest because these fintechs will probably have quite a lot of the solutions that you're looking for. And the fintechs, including ourselves, we are very much looking for customer base. And I know the banks have customer base, so, we'll be very interested in terms of the partnerships, I think is my view.
Now, we've been talking about the necessary sort of government support and the regulatory environment throughout the whole of this conversation. Andrea, I'll come to you to begin with, but what policy recommendations would you put forward to African governments to grow their own involvement in the fintech system or to help boost the fintech system in their particular countries? And maybe bearing in mind, your experience elsewhere in the world, where have you seen this being played out successfully elsewhere in...
So I'm by no means an expert on African regulatory...
Yes.
The African regulatory environment. From my point of view, it really is about standardization. Having standardization. One of the main barriers I see as well towards adoption of digital trade as opposed to traditional trade, paper-based, is the legal system that's in place. There's international legal law in place that provides that trust that underpins international trade. That same level of legal protection needs to be in place for any digital initiative, for there to be a broader adoption. So.
Yeah. Michelle, do you want to add to that?
Yeah. I can definitely pick up on. So I think I was going to add on your government question. Can government play a bigger part? I think this is already starting to happen. I think more can happen. Certainly, there's a few countries I think in Africa who are really focusing now on really improving innovation in their countries, right, and creating a big fintech ecosystem and all that. But it goes back to my point that, with governance and regulation and setting the right policy frameworks, I think government can actually come in and play a bigger part. And they are starting to. We actually just recently, as I mentioned earlier, I was in Nairobi. We had a sort of meetings with the secretariat, the CFTA secretariat, which is very much focused, and the discussion was exactly what we're talking about today, as in how can we support the SMEs better? What is the role of government? To provide that enabling environment for fintechs to thrive, for banks to thrive. What is it that we need to do? But this is from an African perspective. So, with the continental free trade, how does it work for us, in Africa? How can we create that environment that spurs these fintechs, that grows the fintechs, and does not just sit in one part of Africa, in one country in Africa? There's 55 African countries. 4 or 5 countries are dominating at the moment. How do we get the rest on board? How can we provide a bit more, access to financing? So, at the moment, there's a lot of work that's going to be done around the protocols. The CFTA protocols. We're looking at investment protocol. We're looking at women and youth protocol specifically to look at how can we support women and youth-led businesses so that they can access the capital, they can access the markets that they need to, and they can also trade globally. So it's not just that, Africa is shutting its borders and you're only going to trade with itself. No, Africa is going to make itself more competitive so that we're able to trade cross-border. We can get more of our businesses exporting rather than importing, right? We want to do more exporting. We want to create the environment to do that. And then how do we go about looking at things like regulation and data flows? What are the rules? Can we make sure our systems are interoperable? Can we have a payment system that is strong enough? What about monetary policy? What about digital currency? So all these things are kind of being discussed at government level to say, okay, what do we need to do to create the right environment?
If I could just add from a global perspective, actually I wanted to ask Jeff a question here. You mentioned TREDS earlier. This was a great initiative where the Indian government forced all the banks onto the same platform. And likewise, we've got things like the G7 pledging to adopt digital negotiable instruments. But Singapore, you mentioned you work with MAS. Singapore is a great example of a regulatory body of government that's really driving forward. Could you maybe just give us some experience from MAS?
Yeah, turning the tables is great, so I appreciate that. I'm supposed to be asking you questions, but yeah, working with the Singaporean government has been quite interesting. I believe Neil, who's our president, ducked out. He's based in Singapore. It is a great example, I will admit, of a government-led focus on the things that matter, right? And at the Singapore Inc., as they call it in Singapore, sometimes they strike out. But they're brave enough to know that where it affects us, sometimes the winds shift, to say the least. But there's always that solid backing. They obviously have their best interests at heart of their local businesses and people. So it's actually, in some regards, it's been a real pleasure. We contrast that with, we've worked with different governments around the world. And Singapore, I think, is, from where I sit, probably the best. And they're not paying me to say that.
No, I have my own experience working with MAS, and they're very much engaged with the local fintech ecosystem. They're working with companies such as yourself.
What I will say also, as a business manager, they're really good. So there's not a lot of leakage in terms of a lot from the U.S. They have lots of programs, and along with lots of programs, also lots of fraud. And so Singapore is very, very tight with their money, but when they give it out, it's you got clear goals, clear objectives. Clear milestones, et cetera. So far, in fact, we're actually looking to expand in Singapore, not only the office size there, but an innovation lab sometime in the near future. Yeah.
Yeah. I think there was Michelle, you was talking about money or venture capital money being there only in a few markets in Africa. And you're saying that you want to see and you want the investors to put money in. So as a past DFI, okay, so I'll bring some experience out there. Everybody at the end of the day is in the business of making money. Okay, as long as we understand that, because I think it's wishful thinking. I'll be a little controversial as such. It's wishful thinking that investors will put in money in places where they will not make returns. But from a government and a policy perspective, you would want to do that. I think some good markets to look at would be, say, a market like Bangladesh. Okay? Because very similar, very vibrant market, growing very fast. People are leaving the country. There's a brain drain which is happening. Money which was coming into the Bangladesh market on the venture capital side was to exactly diaspora or people from outside who had come in and set offices. So the way they changed it around was first spending a lot of time in actually getting the accelerators up, investing a lot of time in getting the fintechs ready for funding. Because if you give perverse incentives to VCs to actually invest in these companies, yes, money will go in, but a year down the line or 2 years down the line, you will lose money, and it will be a much bigger ask the next time to get money to come into the sector. So looking at the fundamentals and getting those fintechs ready for this could be a way to go for Africa.
Thanks, Roger. We are nearing the end of our time, and you are all due a well-earned coffee break. So I just have one more question to the panelists. It's the same question. I'll come to each of you just very briefly. The question is, what does the future look like for the fintech sector in Africa? And how can that support access to trade finance? Michelle, do you want to go first?
Yeah, sure. Yeah, no, certainly, and it picks up, my comments will pick up on somewhat he was saying. I think the future is very, very bright for fintechs, in general, I think on the African continent. It's certainly very bright, but there's a cautionary note, I think I would say as well, is that, you don't all have to focus on fintech. As much as fintech is I'm in fintech, I love fintech, right? I'm in the world. But we have to think a little bit bigger, and I particularly actually reach out to businesses and fintechs out there to become a little bit more creative beyond what they are offering, because we have to think about, back to his point, about what is the problem that we are actually trying to solve. So even as fintechs, as businesses, we have to make ourselves relevant in the marketplace that we're in today. So, given the African continent, what are some of the challenges that the continent is facing? You have to ask yourselves, can you place yourself as a fintech or as a business to address some of those challenges? What is it? Be it agriculture, food security, manufacturing, things like vaccines, right? That world, where do you see yourself? What role do you have to play? Take a company like Flutterwave. Flutterwave have been very innovative because they've shifted and even started to introduce fintech support just recently. They've gone and raised over 200 million because they're obviously innovating as the world innovates. So I urge businesses to think a little bit bigger than what they're thinking, right? And start to make yourself be more relevant. Second point is just quickly, is very much around sustainability. So your point that he was talking about around having accelerators and getting businesses investment ready, 100% we need to see a lot more of that, but I still emphasize the point on we need to create strong internal investment markets because that's sustainable, right? So if an investor, like he was saying, doesn't see the interest in going to Zambia because I'm not going to get the returns I want in Zambia, but there is an impact investor in Zambia who believes in a certain line, will probably invest in Zambia. And if the person is Zambian, it's probably likely to continue investing in Zambia because they have other vested interests apart from just returns. And remember, the investment market is made up of different providers, so you've got a whole range of different interests. So I think for me, it's very important we think about sustainability. What does it look like in the long term? Can we make this long term? We think about our ecosystem, our demographics on the continent, young people, women. We need to make it a little bit more tailored. I even think even the banks can become a bit more innovative and creative around SMEs, but actually starting to dissect and understand who is the customer. How has the customer's behaviors changed, especially after COVID? And how can we service that behavior, right? Because if you don't do that, I think you find there's new business coming in who are going to feel exactly that. And that's what companies like Flutterwave are doing.
Thank you, Michelle. I think you've touched on a lot of points I would have touched, but just one aspect only. I think the future is about partnerships. I think the future is about partnerships between banks, DFIs, ECAs, regulatory bodies, fintechs, all of these solving relevant problems. That's what I think that's what the future, I hope the future looks like that. It's beyond our excitement with technology and so forth, but solve particular problems. But I think that those problems are not going to be solved by banks, and they're not going to be solved by fintechs, so they're not going to be solved by DFIs. But those partnerships will become even much more important. There's stuff that fintechs are able to do that banks can't do, and there's stuff that banks can do that fintechs can't do. Same thing with DFIs and ECAs and so forth. Last point, I think one of the following up on the point that I think it's Nompilo actually on the floor raised. one of the issues that I picked up was even the AFCFTA discussions, banks were actually far behind. They were not at the center of the discussions. Having been involved with the AFCFTA Secretariat and many other partners, it was quite interesting that banks were looking at this thing very far. And actually, that's a platform of collaboration that is created through the AFCFTA, and banks need to be at the center because there can't be more trade without financing. There can't be more trade without the ability to settle cross-border payments. There's a lot of things that I think we need to do, but a little bit much more effort from financial institutions in the agenda of the AFCFTA. In my view, it's part of what is required.
Yeah, I completely agree. The problem is huge, and one company alone or one body alone is not going to solve it. We need to work together. It needs to be across the fintechs, the banks, the governments. There needs to be a collaborative working environment with someone driving it forward to really address the problem. From a fintech perspective, again, there's so many areas where digitization can bring value. And it's a collaboration between multiple parties to come up with a full end-to-end solution. Even as a provider of software to banks, we work with a number of companies to tailor a solution to solve the specific pain points for a bank. And that really is the way that the fintech ecosystem, we all have to work together to say, what are we trying to solve and how can we solve that together to benefit everyone and to make trade finance more affordable and available.
Excellent. Thank you, panelists, Andrew, Bohani, and Michelle, and again to our fantastic presenters, Ahana, Jeff, and Raja. Let's show our appreciation to the panelists and presenters.